For the past 100 plus years, the average price ratio has been 42 to 1. So, let me pull up my calculator here.
Okay.
If you just took the price ratio of, what do we got gold at today? Gold is at...
Is that like 32.30, something like
Yep.
that?
So roughly 32.30 divided by 42, which is about the average price ratio of the last 150 years. That's $77. Keith Neumeyer, a buddy of mine, says that silver is coming out of the ground at 7 to 1. So take 32.30 and divide it by 7, and you get $461. Now, I'm not saying that's going to happen, but mathematically, geologically, if someone said silver would be $400 tomorrow, would it be that far off? Yeah, it sounds crazy. It does. That's short of the geologic ratio right now. So, there's man's ratio, there's God's ratio, you call it, which is the geologic ratio. The geologic ratio says it should be 460. The price ratio, because it's controlled on COMEX and on the LBMA, says differently. But I would argue that ultimately that's what this is about, with like the BRICS talking about building their own metals exchange. It's about control. It's about the fact that the West controls the price, and these other countries understand that. And I think that building an exchange allows the price setting to move from a system that is massively rehypothecated and in essence fake to one that is more indicative of its real value, real price setting. So I think silver will go higher than people think possible. But just speaking mathematically, if you said $400, it would not be outlandish. Now, I'm not saying that's going to happen tomorrow, but certainly to see it north of $45 an ounce is based upon 150, 200 years worth of price ratio between gold and silver. Western derived price ratio, that would just be reaching the average. So higher than people think possible. And once you get above 45, there is no resistance. So could it go much higher? Sure. I've never told people to buy gold and silver to become wealthy. It is wealth. It's outlived 2 world wars, German hyperinflation, the Great Depression, every pandemic. It's wealth. And the biggest money in the world is proving that, not only through accumulation, but maybe even more relevant is the repatriation. It's removing the counterparty risk that, right or wrong, the perception is it's not a good idea to leave it within the confines of the LBMA or the COMEX. And that's why you're seeing all of these countries choose to bring it home rather than allow it to be held by third parties. So these are all pieces of a bigger puzzle. I'm fond of the term logarithmic decay, which is little by little, then all at once. Well, It seems that the moves that are being made in accumulation and repatriation is the little by little, and it's continuing. With gold, the price is following along with it. You won't see silver go to the moon without gold following. It's just that silver perhaps is more important to the powers that be from a strategic standpoint. And because they have become very wealthy, in peddling war and all of the tools of war, well, they've had to keep silver cheap. It's becoming harder to do that now. So I would expect silver to outperform people's expectations. When? I don't know. But logic and positioning and technicals all would say that it's probably closer than we've been to ever. I think gold will go higher than people think possible as well. But gold will be used, I think, to peg to a new system. You want to talk about once in a generation opportunity. Look, if I said show you how you can double your money with it only, or in essence, double the amount of gold you own with it only reaching its average price of the past 200 years, well, that's a pretty good deal. Just reaching the average price point of 200 years, which is 42 to 1. And in fact, it's over double. You take an ounce of gold and you trade it into silver right now, you're going to get, at 100 to 1 ratio, when you factor in premiums and everything, depending upon the silver, I don't know, you'll at least probably get 90 plus ounces of silver. Well, I mean, that's happened like 0.1% of the time in the last 200 years. It's a speck of dust. So you trade your gold into silver, you get 90 ounces. If all we did was reach its 200-year average of roughly 42 to 1, you over double your money. And so, look, I just simply think that there are very few times in life where all you have to do is get to the average price of the last century plus, almost 2 centuries, and it represents over a 50% increase. I hate talking about buying silver to become wealthy, because that's never why I've done it, never why I've recommended it, but it's hard to ignore. And it's really due to the Western Central Bank and commercial bank suppression for years that has created this coiled spring. I don't know that there are very many assets that offer that type of setup where your downside is next to nothing and your upside is stratospheric. So yeah, I mean, I guess with as much sincerity and objectivity as I can offer, I would say that silver to me is the investment of a generation. And easy for a gold salesman to say that. Honest to God, I mean it. And I don't know that there's a better place to put your money that gives you that kind of return, physical possession, which removes counterparty risk and such low downside. So to me, it's certainly at the top of the list.
You know, it's funny. After all these years in the precious metals space, I still get people asking me the same basic question. Andy, do you really think silver could go to $100, $200, even $400? And honestly, at this point, I don't even blink. Because the question is no longer about how high silver can go, it's about how much longer we can keep pretending that it shouldn't. Let me walk you through the numbers. We've had over 100 years of data to observe the average gold to silver price ratio. And you know what that number is? About 42 to 1. That's the average. Not the high, not the low. The average. And right now we're sitting at what? 85 to 1? 90 to 1 if you factor in premiums? That's not just off. That's a historical anomaly. That's like walking into a room where gravity suddenly works at half speed and everyone pretends it's normal. Now let's say gold is sitting around $3,230. Run the math. 3,230 divided by 42, that puts silver at about $77 an ounce. And that's just to get back to its average historic valuation. Not to break a record, not to match some moonshot, just to return to the 200-year average. So if I told you that you could more than double your wealth just by waiting for silver to go from 30 to 77s, would that sound like a get-rich scheme? Or would that sound like basic regression to the mean? And that's only the beginning. Let's talk geology. My friend Keith Neumeyer, he's the CEO of First Majestic Silver. He's been saying this for years. Silver is coming out of the ground at a ratio of about 7 to 1 relative to gold. That's not a projection. That's the natural geological ratio. That's what the Earth gives us. Now take that same gold price of $3,230 and divide it by 7, and what do you get? About $461 an ounce. Now look, I'm not saying silver is going to $461 tomorrow. I'm not putting that in your Robinhood account as a limit order. But mathematically, geologically, is it really that far-fetched? Not even close. That's not fantasy. That's reality. Just the kind of reality Wall Street would rather you never notice. Because let's be clear, we don't have a free market in precious metals. What we have is a price control mechanism run by the COMEX, the LBMA, and a handful of commercial banks with deep ties to Western central banks. This isn't conspiracy. This is structure. This is documented. You can see it in the spoofing fines paid by JP Morgan. You can see it in the delivery delays. You can see it in the vault drain. The price of silver isn't based on supply and demand. It's based on leverage and illusion. It's based on promises of metal that don't exist. Contracts traded in multiples of the available supply. And that's why I've always told my clients, don't buy paper. Don't play their game. Buy physical metal. Take delivery. Get it in your hands. Because when this system breaks, and it will, it won't be the COMEX that makes you whole. It'll be what you hold. And here's the wild part. We're already seeing it happen. Why do you think so many countries are repatriating their gold and silver? Why is Germany pulling gold out of New York? Why is Hungary suddenly increasing its gold reserves by 300% and bringing it home? Why is Venezuela demanding physical metal from the Bank of England? It's not about the price, it's about counterparty risk. These nations are waking up to the idea that it's not enough to own metal on paper. You have to control it. You have to remove the risk that someone else, somewhere else, might decide your asset doesn't exist when you need it most. And that risk is growing. We've seen what happens when trust erodes. When people no longer believe in the system, they don't wait around for permission. They start acting. And right now, you're seeing that play out in real time. Accumulation is off the charts. Repatriation is accelerating. Premiums are rising. Delivery timelines are stretching. And silver, despite all of that, is still trading below the 1979 high. How is that even possible? I'll tell you how. It's because silver is strategically critical. It's used in solar panels, EVs, 5G technology, medical applications, defense systems. It's in everything. And keeping it cheap is part of the playbook. The powers that be have gotten very rich building out a system that depends on the tools of war and surveillance, and silver is in all of it. So they have every incentive to keep the price suppressed. But suppression has consequences. You can only hold the spring down for so long before it snaps back. And when it does, the move won't be gradual. It'll be logarithmic. Little by little, then all at once. That's what we're setting up for right now. And this is why I get so passionate. Because this isn't about trading. This isn't about calling a top or a bottom. This is about recognizing a generational opportunity. I've never told people to buy gold and silver to get rich. I've told them to buy it because it is wealth. It's outlived empires. It survived 2 world wars. It's weathered hyperinflation, recessions, depressions, and political revolutions. It is wealth. And right now it's trading at a discount so extreme that it's almost criminal. If you own gold right now and you trade it into silver, you can get 90 ounces for every 1 ounce of gold. That's a 90-to-1 ratio. Again, do the math. If that ratio simply returns to its 200-year average of 42-to-1, you've more than doubled your purchasing power. Just by waiting, just by being early. This isn't speculation, this is arbitrage. It's the kind of setup that rarely comes along in a lifetime. And yet most people are missing it because they're distracted, because they're trained to trust Wall Street, because they think the system will always work the way it always has. But it won't, because behind the scenes, the system is already changing. The BRICS nations are talking about building their own commodities exchange, one that isn't based on leverage and paper, one that isn't priced in dollars, one that uses real physical inventory and prices metals accordingly. That's the game changer, because once the East takes control of price discovery, the West won't be able to suppress the price through contracts anymore. And once that happens, the price of silver won't rise. It'll be unleashed. The only question is, will you be ready?
Look, I've been conditioned for so long to expect the other shoe to fall that it is somewhat surprising to see how fast it has gone higher. But I think markets go higher to the upside than anyone really ever thinks possible. And if you take a step back and you are really being honest with yourself, ask yourself, why would the most powerful bank in the world in 2019 reclassify gold as the world's only other tier 1 reserve asset? And along those lines, why would the most well-funded and well-informed traders on the globe, the central banks, go on a repatriation and a buying spree since 2017 that the world has never seen before? Why would that continue unabated? And bring it closer to home, why would the United States become net importer since November of the world's only other tier 1 reserve asset? And we see the countries around the world that are voraciously accumulating gold. There's talks of it being pegged to a new system, as we were told by Dilma Rousseff, the former president of Brazil and the head of the new development bank, that they've agreed in principle to a new currency called the unit, which is 40% gold backed and redeemable upon demand. And everywhere we look, from accumulation to repatriation to reclassification to slow moving higher, or even Judy Shelton, who you interviewed, who has told me flat out Trump is going, by her belief, will issue gold-backed treasuries next July, 2026, the 250th year anniversary. You put all of these puzzle pieces together in and of themselves, each one is significant, put them together, and it's almost impossible to not expect gold to go much higher. So yes, on one hand, as a guy who's been doing this since I was 19 for the last 35 years, I am surprised that it's moved in the manner that it has, as fast as it has. But when I take a step back and look at all of the pieces that are coming together quite eloquently, and outside the purview of the mainstream, mind you, which gives me more confidence that this is the right path, because, the insiders never want to be too transparent about the direction that things are moving. Yet they're positioning as if that is the direction that they're moving. To me, it becomes, that is pretty convincing that maybe indeed that is where we are heading. Quite frankly, if I were being completely honest, I would say that it's going to go higher than people think. You even Goldman Sachs or UBS, one of the two, coming out and saying, you could actually see $4,500 gold by the end of this year if things get bad in the bond market with the basis trade or whatever it is that could trigger that, raising their low end projections to north of 3,500. I think perhaps we're going to see gold outperform people's expectations, mine included. It's abating a bit, but we're still seeing big deliveries. I mean, not quite as big as we were seeing in February, but even still, we're seeing it in the March contract. We saw big deliveries, 50 million ounces of silver delivered in the first day of the March contract, 70 million ounces of silver drained from the LBMA in January. That's an all-time record. We saw massive amounts in February, still seeing it in March. It's happening.
Let's dig even deeper, because this opportunity, this moment we're living through, isn't just historic in scale. It's spiritual in its implications. This isn't about trading a chart. This is about protecting everything you've worked for in a system that's reaching its logical conclusion. We already talked about the geological ratio, silver coming out of the ground at 7-to-1. We talked about the historical price ratio, 42-to-1 on average. And we talked about where we are now, 90-to-1, 100-to-1 if you factor in premiums. That's a price distortion so absurd that it shouldn't exist in a functioning market. And that's the point. The market isn't functioning, at least not in any real sense of the word. It's functioning as a pricing mechanism for paper speculation, but not for physical reality. And physical is where it's all headed. Let me take you back to 1968 again. That's when the London gold pool collapsed. For years, the US and a group of allied central banks had been artificially keeping the gold price at $35 an ounce. They dumped reserves into the market to suppress it. Sound familiar? But by 1968, they were losing gold at an unsustainable pace. And then, overnight, it snapped. The pool broke, the suppression ended, and gold started its move toward $850 by 1980. It was inevitable. Today, we're watching the exact same thing happen in silver, only this time, it's even more distorted. The supply is tighter, the use cases are broader, and the systemic trust is lower. And unlike 1968, we now live in a world where information moves at the speed of light. Where one headline, one tweet, one liquidity event could trigger a cascade. What happens if a major industrial user, say an EV battery manufacturer, can't get their silver on time? What happens if a bullion bank defaults on a delivery? What happens if a sovereign nation openly accuses the LBMA of overpromising? The dominoes are already leaning. The question is which one falls first? And while the LBMA and COMEX are still functioning, they're doing so under stress. That's not theory, that's fact. The Bank of England has delayed delivery. The COMEX has seen registered stocks decline month after month. We've had deliveries outstrip open interest. We've had standing for delivery rates rising year over year. And guess what? The response hasn't been to increase transparency or availability. The response has been to move the goalposts. T+1 turns into T+20. Settlement becomes intent to settle. And investors, real investors, are seeing through it. You want proof? Look at Shanghai. Right now, premiums on silver are 7% higher than in London. Why? Because the Chinese market prices based on physical delivery. It's not about leverage, it's about metal. And when premiums like that persist for weeks on end, it means there's strong, insatiable demand that cannot be met by the paper markets. And people are arbitraging the difference. They're pulling silver out of London and shipping it to Asia. That's physical flow, that's physical pressure. And once you can't meet that flow with real inventory, your paper price becomes irrelevant. Now here's something most people don't consider. What happens when that flow reverses? Let's say the BRICS actually launch a gold or commodity-backed trade currency. Let's say they finalize the unit system. Let's say they create an exchange where silver and gold are priced on physical settlement. What does that do to the Western price-setting mechanism? It renders it obsolete. Suddenly, London and New York aren't where you discover price. They're where you see the lag. The price becomes a function of what happens in Dubai, in Moscow, in Mumbai, in Shanghai, not what happens at JP Morgan's trading desk. That's the future, and it's already being built. And if that future sounds too distant, too theoretical, let me bring it back to today. I talk to investors every day, and I'm seeing something I've never seen before. We're getting first-time buyers coming in with 6 and 7 figures. People who never thought about silver 5 years ago. People who thought gold was just a hedge. Now they want allocation. They want possession. They want security. These aren't doomers. These are doctors, lawyers, small business owners, everyday Americans who are finally looking around and saying, I don't trust this anymore. And who can blame them? When the Fed tells you inflation is transitory, then it's persistent, then it's sticky, then it's a good thing. You stop listening. When the government spends trillions with no fiscal anchor, you stop trusting. When the market gives NVIDIA a $2.5 trillion market cap while the average American can't buy a dozen eggs without wincing, you start looking for truth. And that's what gold and silver are. They are truth in a world of distortion. They are freedom in a world of surveillance. They are honesty in a world of synthetic leverage. And silver, because of its tightness, its utility, its under-ownership, may be the most explosive expression of that truth. Look, I've never liked pumping silver as a get-rich asset. I've never told people to buy it to double their money in 6 months. But I also can't ignore the math. I can't ignore the setup. I can't ignore what history tells us about what happens when price and reality diverge for too long. They snap back, hard, and when silver snaps, it's not going to $35 and stalling. It's going to run through resistance like it isn't there. Because at a certain point, fundamentals don't matter. Positioning does. And silver is so hated, so shorted, so misunderstood, that it's like a coiled spring waiting for ignition. All it takes is one big player to say, I want delivery. All it takes is one bullion bank to default. All it takes is one sovereign to launch a physical pricing exchange, and the game is over. So let me end with this. If you own silver today, real silver in your possession, you're not just holding metal. You're holding truth. You're holding a piece of history. You're holding a hedge against not just inflation, but against institutional dishonesty. And you're holding an option on a reset that could happen not in 10 years, but in 10 weeks. This is the moment. Not because the charts say so, not because I say so, but because the fundamentals are screaming and the smartest money in the world is moving in silence. You can ignore the noise. You can tune out the media. You can look at your kids, your spouse, your balance sheet, and know, I'm prepared. And that's the real payoff. Not just wealth, but peace of mind. Gold is money. Silver is opportunity. And right now, both are being gifted to you by a market that still hasn't figured it out. But they will. And when they do, you'll already be there.
Stay informed about the latest developments shaping the precious metals markets with regular updates from the Finance Daily team. Not only that, but as a subscriber, you'll also receive timely silver and gold price notifications and early access to groundbreaking news unavailable to the general public. Join our free gold and silver newsletter today, link in the description. Stay informed about the latest developments shaping the precious metals markets with regular updates from the Finance Daily team. Not only that, but as a subscriber, you'll also receive timely silver and gold price notifications and early access to groundbreaking news unavailable to the general public. Join our free gold and silver newsletter today, link in the description.